Hi, good evening, everyone, and welcome to the Let's Talk About Market episode number 63. Today, if we see the move in the Nifty index was very subdued, and it was, it traded in a very narrow range. Uh, but if you see the market internals today, those were pretty good, and there was some, you can say broadening of breadth today, but there are few things that at least in the very short term, where we are coming to an important level, and what happens next from here would be important to know, because the Nifty index is at a crucial juncture. So let me quickly share my screen and discuss where are we. So wait, uh yeah, I've shared my screen. Please let me know, once you all are able to see my screen, and if you all are able to hear me properly. Please put a message in a comment box if you all are able to hear me properly and see the screen. Meanwhile, I'll just set up the screen. Now, please, someone message me in the comment box if they are able to hear me properly and see the screen. Okay, thanks for the confirmation. So, if we see the Nifty index, we had talked about it, 2 3 days back, that over here, the lower band and the 40 is expected to be an important support level for the Nifty index. And the Nifty index respected that, and from there it has turned around. If you see on the daily chart, there is a small falling channel which is there. You call it a falling channel, flag, it doesn't matter, but basically, the idea is that this correction has happened in a small downward sloping channel, and currently the Nifty index is at the upper end of the channel. Now over here where we are at, okay, the upper end of the channel, you can see that the 20 DMA is also around this 26,031 mark, and the Nifty closed just around that. And in fact, when you do, uh, when you do a Fibonacci retracement from top to bottom, so you'll realize that the 61.8% retracement level, okay, let me just stretch it, is somewhere around 26,081. So that was one of the reason, why I had mentioned. Uh, I've been mentioning from past couple of trading sessions that somewhere around 26,100. If we take it a round figure, that is where an important resistance level is in the near term. Okay, and that's why, right at the start I mentioned that we are at a very crucial juncture. That is because multiple resistance levels coincide around this point, like, right? So broadly you can say that 26,050 to 26,100, that is the broader resistance zone. And I think until that is not clear, in the short term there is a tug of war between the bulls and the bears. So we need to see which way things unfold. If you see the hourly chart, the good thing that is happening right now over here is that, wait, let me just remove the background. Okay, so the good part that is happening over here is that once the 40-hour exponential average was broken on the upside, now it seems to be consolidating above that. The early RMI, as you can see, is in a bearish mode. So I don't know if there will be a correction like this and then we can inch higher, or what, we need to see. But yes, the broader point is that 26,050 to 26,100, that zone needs to be broken decisively on the upside. That's where, with some degree of certainty, we can say that maybe the short term correction is complete. Now, if you notice some other index like Nifty mid cap, okay, let me just, yeah. So if you do the retracement from top to bottom over here as well, you can see that the mid cap index has also, kind of halted around the 61.8% retracement. Okay. And if we do the daily chart over here, while the daily RMI is on the verge of giving a bullish crossover, what we would want to see is close above the 20-day SMA, which is at 60,400, and right now it is at 60,200. I mean, 212 is where the Nifty index has closed. So I mean, in the near term, the Nifty index, be it Nifty index or Nifty mid cap index, they are at an important resistance level. Now, one more reason why we have to take a note of this is also because when you look at the sentiment indicators and the daily swing, which is more like, as I've mentioned earlier in the past as well, that it works very well from, 1 day to 5 day kind of perspective. So what had happened was that the daily swing entered into an oversold zone over here, okay, which was somewhere around this point. And in the last 2-3 days of up move, uh, I mean, today also, if we see that the Nifty is down by 19 points, but if you see the small and the mid cap, small cap was up by 0.2%, micro cap was up by 0.5%. So that way, if we see, the broader breadth was good in that sense. So, uh, yeah. Wait, let me sorry come back over here. So over here now, what is happening is that the daily swing has come to 83, 84 levels. Okay, the average swing has also bounced back, and it is now around the midpoint, around 52 levels. Now, see, I mean, I'm telling you this from my experience that if the Nifty index has to inch higher, right? I mean, if it has to break out on the upside, then what will happen is that the swing will go to above 90 levels, and then end up forming some divergence before we see some sort of meaningful correction. Okay, so in which case, you will have something like this happening. But I'm telling you this because many people say that, oh, swing is coming to 84, so now does that mean that the short term correction, I mean, up move is complete, and do we get a correction? So that's where, cases like this happen. Now you see over here. Okay, over here in 3 days of up move, basically the swing went to around 91 levels. Then it went higher, it sort of formed divergence, and in this sort of correction, sorry, so in this sort of correction, you saw that the swing came to oversold, and from there it went higher, right? So I would be expecting something like this. I mean, if at all the correction has to happen, but swing in this case was very relevant from the short term perspective. But at some point, if we anticipate that the trend is going to pick up, which is what frankly I think might happen, so then this swing will become kind of irrelevant. And and then, I mean, as the Nifty index trends higher, I mean, hourly averages is where you will have to fall back, and you'll have to see if there is a trend reversal happening or no. So yes, I mean, this is how I'm frankly thinking at this point of time, that Nifty index breaks out from this broader resistance, we then inch higher, and then we end up getting some sort of correction, pullback, and so on. And there will be negative divergence that will keep forming before a short term correction has to happen. Now, also, one thing that people have to realize is that, I mean, one should not ideally be very aggressive, because all the short term indicators, okay, the extreme short term, which were 2-3 days back, which were hinting towards extreme oversold zone, right? Like you see over here, call minus put, extreme oversold, right? Even swing around extreme oversold zone. Average swing, I mean, because it is an average, it lags by a day or two, and that also eventually came to oversold. Now, when these three things were there, I mean, over there, you can safely anticipate that a short term correction, I mean, short term correction in the Nifty can halt, and there can be a pullback that can play out, and that is what has played out. Now, I mean, we need to check today's data. What will happen? It will be updated, after the Bhav copy. But say if the call minus put comes to minus, I mean, which is in red. okay, and we already have this average swing at 84 or something like that, then there is a possibility that we might end up getting, some sort of consolidation or something like that. So this, of course, we need to see, but just letting you know. Now, on the downside, the level that one should be very closely watching is basically somewhere around. So yes, see, now there is a gap also, but ideally, I mean, if the Nifty index has to trend, then probably the hourly average should not break on the downside. So hourly average is breaking on the downside will open up a downside possibility up to the hourly lower band in the near term. Okay, and that's where then, what happens is that if the averages break on the downside, then you might start feeling the risk that was this just a pullback and can we fall further. So especially for the very very short term, okay, this I'm telling you from like 1 day, 2 day, 3 day kind of perspective. If you have then this is the level, basically the hourly averages is the level to trail. At the max or at the worst, you can keep this minor gap zone as the reversal level, not beyond that, because if these levels break on the downside, then you might feel that risk that can it again retest on the downside and probably get lower as well. The reason why I'm talking about, I mean, talking with you all on such a micro level is because, sorry, let me take the Nifty index. I mean, this is the reason why I'm talking very short term stuff, because if the Nifty ends up breaking this low, which we found recently at around 25,700 levels, then the risk opens up that whether can it correct till this point or this point, and that's where all those debate will open. As I mentioned earlier, I'm not expecting that to happen, but yeah, I mean, because in the short term we are coming to a very very important resistance level. That is why, I mean, it is worth talking about all the scenarios, so that you might also be careful. Okay, I think, you know if you ask me, the safest bet right now is that you form long positions one this break. I mean, that's where aggressive long position has to can be built. If the Nifty index breaks out of these channels and sustains above it, then you can start building your positions. And as I mentioned, I mean, break above this level is where probably you might want to be a little more aggressive. But at this point of time, when we are at a make or break level, I mean, it is worth waiting for 100 points, because as I've told you earlier, if this resistance level breaks on the upside, there is almost like a 2000 2500 point kind of upside that we can see. So we wouldn't want to be penny wise pound foolish, right? So that's why, I mean, the best way I would think about it in the near term is that wait for some confirmation, wait for some clarity, okay, and be a little patient. And in fact, while the market is not doing anything, on Friday's trading session, I had showed you many ways to scan the stocks. You might want to just scan your stocks and find where is it that the setups are interesting, and then maybe you can think towards forming the position when you get a confirmation. So look at both the ways. I mean, for the ones which are strong, for the ones which are weak, and you might want to make those lists so that it is helpful when trend actually picks up. Okay, because I mean, the Nifty index has been consolidating. So if you take this as 24th October, almost for 1.5 week, 1.5 month, the Nifty index has gone nowhere. So at some point of time, I would expect that the trend should pick up. But as I've been mentioning for quite some time now, I would expect that this trends will eventually break out on the upside. But when that eventually is I mean, is a big question mark, and that's where it is testing a lot of patience. So But yeah, the only point over here to note is that all those, that were pointing towards extreme oversold zone, in fact, even if you now see the option PCR, it has bounced back from those oversold zones of 0.65, and it has come to around 1.17. So all these are, sort of neutral, and kind of telling you to I mean, not telling us anything of an extreme as yet, but it is kind of neutral. Okay, and we have to wait and watch. Now, in terms of, if you see the indices, uh, I think, IT is the one where there, it has been trending higher on the 20 DMA, and it is trending above that. Auto is also above the averages, but it is, you will have to wait for the RMI to give us the bullish crossover to anticipate the next leg on the upside, right? So that is one. I think, this might look like a dull sector, but I think that FMCG is also at an interesting point. That is because if you notice, this is the entire range which it is playing in, right? I mean, just if I have to show you, this is the broader range. So apart from, this spike was due to that GST rate cut. But apart from that, if you see, this is the broader range, and now it is trying to turn around from this broader range. And there, and the RMI will also kind of give us a bullish crossover. So this can be an interesting sector. It has been sideways. uh, Ideally, see, if Nifty index has to go higher, it will need support from all these sectors, right? So this is one. If at all, it tries to bounce back towards the upper end of the channel, then there is like a 1,000 point kind of move which is there, which would translate into 4-5 percentage kind of move on the upside. So that is one interesting thing. Then again, metals is the one. In last few days it has come back in focus. So it has broken this trend line. Okay. So now we need to see whether this up move continues or no. But yes, the daily RMI is in bullish mode. So that is a good thing. So, and the other thing is that, if you want to find the sectors which are doing well in the near term, I think in that case it is worth looking at RRG, the daily RRG, I would say. Okay, not the weekly, the daily RRG. So this is, yeah. So this is the daily RRG. So over here you can see that Nifty metal, it is gaining good strength. Then the other one, you can see that media. But media is largely dictated by Z, so you might want to avoid that. Then reality is the one, which seems to be gaining momentum as well. FMCG has seen minor uptake, and I told you that FMCG chart is also good. So maybe, you might want to see what it does. But see the other index like bank, pharma, financial service, auto, they all seems to be losing momentum and relative strength. What you might want to see is, some bit of turnaround on the upside. That's why you might want to be interested in these indices. But apart from that, focus on the ones where the momentum is good and relative strength is also good. Okay, and just keep on the radar where the momentum is improving but relative strength is not improving that much, like energy, PSC, consumer durable, and so on. These might be the ones where you would want to keep these stocks on the radar. These indices on the radar. And if you do a bottom up, top down approach, then you can find which sector you are finding it better, and then you can try to find those stocks within that. So yes, as I mentioned broadly, that is what the setup is. Many of the Nifty indices, or even if you see Bank Nifty and all, they are trading all above the 40-day exponential average, right? Just give me a minute. Just give me a minute. I am getting an important call. sorry. So yeah, I mean, if you see many of the indices in the Nifty index, they are all trading above the 40 period average, right? Like you can see bank, then I showed you auto, which tried to bounce back from the 40-day. Then IT is already trending above the averages. PSU also, it is trying to come back from the 40-day exponential average. So that way, many of the sectors which were trending higher, they are all holding above the 40-day period, which is a good sign. And we all need to see momentum coming back. Okay. And I think if the Nifty index ends up breaking this important resistance level of somewhere around 26,050 to 26,100, we'll probably see the momentum coming back. Okay. But till that happens, probably we'll need to be a little more patient. So that is what we have it. I mean, that is what the setup that we have, and we need probably a day or two to see the confirmation. So yeah, I think that is it from my side. I mean, not much has changed from what Friday is, but the only thing that was important to note today was that lot of things which were showing as oversold in Thursday or Friday's trading session. I mean, from the very, very short term indicator perspective, those all have turned around and either come to slightly overbought or towards the neutral zone. So that was basically the thing that I majorly wanted to highlight today. Okay. Now let's take up any well, if there are any questions. Kushwan Kumar says, I think tomorrow is a selling day after tomorrow 600 point up. What's your view? I mean, if it is 600 points up, then I don't think, I mean, then I would think that a bottom was done at 25,700, and maybe then that journey of 28,500, which I have been talking for a while. I mean, looking at all the FII data and so on, uh, I think that should come. I mean, if it is a 600 point up, like you're saying, then I think that we should eventually break out on the upside and see a trending move on the upside, and then maybe I wouldn't expect uh, selling over there. So that is what I'm expecting. Ramesh says, which time frame is good for swing for 3 to 5 days? So it is hourly. I mean, Ramesh, frankly, I or we at India charts, we don't go much below the hourly time frame. I mean, that is like the lowest time frame that we usually prefer. So swing trading with hourly charts, I think it does work well in our experience. Hourly RMI crossover below zero or above zero. So I mean, below or above zero doesn't matter. Uh, but yes, all you would want to see is that whether in the consolidation the prices have remained above the averages or no. So if they remain above the averages, I mean, we have talked about those setups many times. If those averages are held, and then there is a bearish, I mean, bullish crossover after RMI touching the zero line. I mean, going below zero line or above, I mean, crossover happening below zero or above doesn't matter. It's the positioning of the price action. Okay. And ideally they should be trending higher on on both the averages on the time frame that you're looking at for the crossover. If that happens, then typically they are good setups. Just to give you an example, say something like this, right? Like we are seeing right now, it has been trending higher on averages, like you see over here. Sorry. Yeah, like you see over here, for it is trending above the daily averages, and this is the kind of setup that you would want to see. So if there is a bullish crossover, okay, maybe today or tomorrow, and it ends up breaking this resistance, then I would expect that probably it should headed higher. I mean, it should be heading higher towards the new all-time high. And if I want to think of some level, maybe I would draw a channel like this and think that it can rise higher towards this upper end of the channel or something like that. So yeah, I mean, that is how we would view it. So, but as I mentioned, I mean, see, this crossover was happening well above, 0.51 or something like that. This crossover had happened below zero. So it does not really matter. You have to just try and understand what the trend is going to be. Okay, if you're expecting an uptrend eventually to unfold, then RMI crossovers are the point where now the momentum is shifting on the upside, and that is where what you need to take a note of. Any profit booking technique or ideas when we are trading swing? So once, now see, I'll just give you an example. Good question. So see, we saw that the swing. Now let's take one period. Okay. So ideally in swing, okay, firstly you have to understand that you have to trade swing. I mean, usually trading swing in the direction of the trend is very profitable, which means that if it is in a downtrend, then during the downtrend, whenever it comes to 80 or 90 levels, I mean, you have to think of shorting it for the next leg of the downside, right? So over here, since the broader trend is bullish, so every time when it comes to 2010, you might want to think of taking a position. Now let's take something like this. Okay, on 29th September, when this got oversold and then the up move happened, right? So let me just take this chart. It was basically this period. Now over here you can see that the swing got overbought at on 6th of October itself, right? So 6th of October was what? Was this? Okay, was this. I mean, 3 days of up move and it got in overbought. So when there are periods like this, this is the setup that we usually have. Okay. So over here, ideally 40 period becomes your reversal point. Okay. So over here, you can see that there was one a breakdown below that. But ideally, in a very, very strong trending market, you won't even get a 40-day break. Okay. This was a 40-day break. So maybe, swing might have thrown you out over here. But then again, there was a bullish crossover, and then you have to do that trade. But if you're purely trading on the swing, then ideally 20 hour or 40 hour, depending on how far the market has gone, you might want to keep that as your reversal point. Okay. So that is how ideally we think about it uh, for basically trading the swing. DV says, thank you for the analysis. The key thing to see if gaps are sustainable. Uh, they always, because they always cause pullback and then momentum loses. We are optimistic midcap needs to recover. Yes, definitely. I mean, see, right now we are seeing this, right? I mean, we are seeing this dull market, and that's why we are feeding that thing. But as I think the market starts getting trending, I mean, you will see these kind of moves playing out. It is just that, I mean, every time. So as you mentioned, that a lot of patience is being tested, but I am viewing it this way, that there has been this breakout that has happened, right? And the Nifty index seems to be consolidating around the higher levels. So if at all it was drifting lower, I mean, that was a different case. But because it is consolidating at the higher levels, I don't know. I mean, whether it forms some of this kind of consolidation and only then breaks out, I don't know. But I think if at all there is a breakdown that is gonna that it is going to do, then we might get some signals. Okay, at this point of time I'm not seeing any signal. Okay, I mean, it is 25,700. If it breaks on the downside, then it will be a little worrisome. But I think as long as it is below this low, I would expect that at some point of time this consolidation breaks out on the upside. So let's see. Pushwant says, I think a similar formation is going to develop to what Nifty did on October 14th. What did Nifty do on October 14th? Okay. Okay. I mean, let's see. I mean, this was a very, very small channel as such. But, anyways, let's see what Nifty does. So, as of now, I have already mentioned the levels that I am looking out for. Let's see. The reason for good selling pressure tomorrow is that the market will scare. Right. Right. So, I mean, if we have to go by the data and so on, I mean, I am just trying to give a lot more logical reason and not what I'm feeling. Uh, so yeah. But yes, I mean, given that the daily swing has come to 83, 84 levels, and we have still not broken out, I mean, that's where I will be a little bit skeptical and sorry, just give me a minute. Yeah. So, so given that the Nifty index has not broken out and the swing has reached 83, 84, so I will be a little bit skeptical and see how things unfold. Though, I mean, as I mentioned earlier, I feel that this breakout should eventually occur on the upside. But yes, I mean, given that we are at a critical point and the extreme short-term indicator like swing has come towards the overbought zone, so I might wait for a day or two to see how the market unfolds. So yeah. Any other questions you all have? I think I've addressed all the questions which I could see so far. Any other questions, then please shoot it. We have 5 more minutes, I guess. I'll wait for a minute. I mean, if at all there are no more questions, then we can wind up for the day. Ramesh says, explain more on RRG. Okay, let me just quickly share with you what is RRG. So in RRG, there are basically two quadrants. One is relative strength and one is momentum. So this momentum is of the relative strength. Okay, so that's where we get a good idea of the momentum as well as the strength of the underlying trend. That's where it is very helpful. And usually they rotate in this four quadrant, right? From improving, they go to leading. From leading, they will weaken, and then they'll go to lagging, and that's how the broader framework is. I mean, to explain you the entire RRG, I mean, we have done all the 45 minutes webinar that we have. I mean, I would request you to please go through that. But see, yeah, just to simply tell you what RRG does is that it takes something as a benchmark, in this case Nifty 50 as a benchmark, and it will judge everyone's performance keeping one benchmark as constant. So that sort of tells you that which stocks or sectors are doing well, which are not, quickly in a view. Okay, because otherwise you will have to scan all the charts, right? But over here the beauty is that you get to see everything in one screen and a visual form, which can be very, very quickly identified. Like, you can see over here the strength in the metal that is there. I mean, there is a long tail over here and so on, right? So you might be interested in metal and see what it is doing, because why is RRG showing so much good strength and momentum, right? So that is the beauty of RRG. To learn more about it, please go to strike underscore IC. Oh, sorry, strike money. Okay, go over here in life and Your put RRG webinar. Okay, there are a lot of webinars that we have done. Please go through them. I'm sure you would find it very helpful in understanding the concept. And RRG is, very, very good to even manage your portfolio. Okay, because uh, I mean, just in one screen, you will be able to understand which are your outperforming and underperforming stocks. And if at all you want to rejig your portfolio, or remove out the losers and try to get in the winners, I mean, you can again use RRG and rebalance it quickly. View on Bajaj Finserv. Sorry, I don't want to talk stocks. I mean, it's not. I mean, we can do all those stuff on India charts, but not so much on strike. That's why I'm trying to, talk broadly on the indices or on the processes of filtering out the stocks. So, So yeah, I think it's 5:35 now. So thanks. I think we are up for today's. The time is up for today's session. Let's meet up tomorrow at 5 p.m. and let's see. I mean, if at all we end up getting the much awaited breakout or no. So let's see how things unfold.